All right, everyone. Hope you survived today. So, as we all know, everything crashed, um, including the sanity of everyone in the market. As obvious that, there's a lot of things to talk about, right? So, by the way, thank you for joining me. I got my cup, I got my tea, so I'm ready to go. It's just going to be a short little stream because I'm not gonna go for too long because it's 10:45 where I live, Central. Um, and so I probably will not get a lot of people, but that's not the point. The point is to kind of make something like where I don't know. I said I'm a trader. I do this for I'm self-employed, so it's a great way for me to kill some time and be involved and because I have other businesses, and this is a great way for me to be in touch with the market, so to speak. So, at any rate, just want to do a short stream about like where the market is at, and this is something that because I was thinking of doing a bigger stream, but the more I thought about it, there's so many things happening. I figured I'll just make a bigger video and just do like a small stream as to what's happening, what are the actions that could be taken. So last time I streamed it was on Thursday, and I kind of went over basically where the market was at and where we might be going in terms of what the market might do on Friday and going forward. So the whole conversation was to the extent that as kind of went over, the market is in a definitely in bear market right now. It's and the thing is that it's not just a simple correction at this point. I mean, I think we are going into a bear market right now. Sorry, if we can step back a little bit, it's technically we're by definition we're not a bear market yet because you have to hold for like a few a month of down movement. Less than a month of downward momentum doesn't necessarily mean a bear market, but it is definitely a really massive correction. But the thing is that the massive corrections happening at the same time when a lot of things are converging at the same time. It's like black swans, but this is like two, three, four black swans coming in together. So we have obviously this is all the linchpin of this whole thing is Corona Chan, right? So the Wu flu is has screwed also screwed us over basically. So and not necessarily the Wu flu itself, but the fact that the way that people reacted to the Wu flu, and the fact that if essentially at each levels of the establishment, they have effectively acted as literally retards basically. Um, so what we have a situation now is that has rolled over and has acted as a catalyst. And like some of my previous videos and streams that I've said that that's basically a catalyst for a cascading effect, and we're seeing those effects now. The biggest things now also over the weekend, what has happened is this is by the way on Monday the 9th of March, if you haven't figured out by now, if someone sees this video later on, and if you haven't seen, let's look at a little short. Okay, so this is my platform. As you can see on SPX, the market closed the day at 27.46. In fact, the low was something in 27 and 30 something. Let's take a look. The low was 27.34. Yeah, there you go. The low was 34. And the market opened down. There was, Corona Chan, the Wu flu is popping up everywhere in the states. You have the whole so the second there's other twists that are coming in. So not only do you have the complication of Corona Chan, and you also have, let's switch back to my beautiful face. Not only do you have the complication of Corona Chan, now you're seeing that it's rolling over into other aspects of productions. This has really not really affected the U.S. state side yet in terms of like deep felt effects of it. And it hasn't shown up in say U.S. stateside PMI or unemployment rates and things like that. But at some point, given the way that they have dealt with this, it's pretty clear that that will be affected. And once we see that, then people will basically it's like people don't want to accept what they're seeing, so they'll go into it and then they'll start saying that, hey, we have a recession. Let's see, someone texted. All right, Bacon. Let's see if you're on. Just give me a holler. So over the weekend, you have other unforeseen catalysts or events that were not really accounted for. Now that's part of the whole picture. So essentially, you have not only coronavirus, now you have other unforeseen, let's say, black swan events that are just compounding the main linchpin event that's moving everything down. So we're speaking of essentially the oil pricing war between, practically speaking, the Saudis and Russia. The backstory is effectively that all this time that the Russians and the Saudis, which OPEC plus, quote unquote, which is Russia plus and the OPEC, they have been throttling oil production in order to keep the prices high. But at the same time, what happens is that also keeps the U.S. state side. The way it affects the state side is that it keeps afloat the state side shale oil production, right? Because it's not as commercially viable to the. By that I mean it's not commercially viable to the extent that if the price of oil goes below $50 a barrel or so, they become they're not profitable, right? Not to mention the return on investments on shale oil is much lower than, say, in the regular, like, straight from the ground type of the big oil wells like we think of in Arabia or what have you. Let's see. Tom, man, how you doing? Hey, this is gonna be a short video. This is just gonna be like me going over like basics of the market, what's happening, because these are exciting times. I mean, sorry, I don't want to sound like a like a strange guy, but this is like when things happen, and yeah, I mean, at the minimum, what I'm gonna go talk about is basically what could we see, what could be the after effects of this, of the move that happened today. And so, as like I was saying in my last stream, that the market is likely to go down even more because, again, the sellers are in control every aspect of the market. The sellers have been basically they're driving the market. It's not so much so that they're driving the market. Now people are reacting to the overall picture, is that the catalyst that's driving everything is Corona Chan, the Wu flu, and the Wu flu is now is making everything worse. So now you have other black swan type events, other things that are now making this whole situation worse. So now the question is, what are those things? So essentially, as we were talking about the oil picture, essentially what's happening is and this is my opinion, let's say my, based on trading and things that I've seen around my experience, with trading the futures market and oil market and what have you, is that you have essentially they're essentially working for market share, right? So the Saudis, couldn't come to a understanding with the Russians. Essentially, they do have a cartel, and the cartel could not come to a conclusion as to what to do with production. What happened is the Saudis basically are going to be ramping up the production because the Russians did not come to understanding with them to lower the production, the oil production in the first place, right? And what the Russians did is, because essentially they're losing out, from their perspective, they might be losing out on market share. And so what they have done is basically they have essentially, come April 1st, they have said that everyone can, everyone can basically, as far as the cartel, everyone's free to basically pump out as much gas as they want, depending on if what they want, right? The problem with it's not, if you think about it, it's not really a problem, right? In the sense that cheap oil, why would anyone complain about it? It's not so much as a bigger problem as coronavirus in all actuality. It's just the market is reacting, in my opinion, is overreacting to it, and it'll kind of retrace. But the problem, not necessarily the oil market. The oil market is not overreacting. This is bad news for oil prices, but it's a reaction in the other areas of the economy isn't as bad. What this does, it makes the main reason, which is the coronavirus effect of them, worse, right? So oil going down in price means that what has been one of the sectors in the U.S. economy in the last 5 years, especially since Trump took over, it's energy sector, and especially shale oil, right? Because with high prices, they became viable, and so they became a big part of the GDP. They became, the United States is now a oil exporter instead of what used to be that they were all importer, which is pretty amazing. But that was all built on the fact that it's based off of getting access to oil that were less, that were basically less commercially viable from the perspective of, the price has to be high enough for those wells to be, to be profitable. Let's see. And so what ends up happening is now that's not really a big problem. If this was it's just some other time, that would be a problem, because but it's not going to be a systemic problem as we're seeing right now, because that would be a problem in the sense that, okay, the energy sector will take a hit. People who are invested in the energy sector, people who invested in bonds or things like that, of these smaller scale shale producers, shale operators, they'll be hit. And that will have some cascading effect. But now this makes it all the worse, because again, cheap oil price is not bad. In fact, when China gets online again, it will help other nations, other economy to get back up to speed when they get back up to speed. But in the meantime, it makes everything worse in the States. That's the problem. So it'll hit the shale people. It'll basically make a lot of those oil production that we've had to, they'll make it uneconomical. And what's going to happen is basically you're going to see massive cuts in oil production effectively. Those numbers are coming out, and the export will be going down. Which is the funny thing is that used to be, if you look at the U.S. dollar, the relationship between the U.S. dollar and oil will be inverse. Because if the dollar is strong, that means that you can buy a shit ton of oil. Vice versa, if the dollar is weak, you can only buy so much oil, right? So because then oil becomes expensive. So, but what's happening if you look at the numbers lately, and I was kind of surprised by that, because since we have become exporters in the last 3, 4, 5 years, the dollar kind of goes and it goes in conjunction and with the dollar, with oil. So now oil, you might see dollar maybe also kind of weakening because of this relationship now that they have with oil. Exactly what other reason? I can see that from the trading perspective. There are some other theories behind it which are more complex, and it'll take me more time to explain them. And also at the same time, that's really complex, and I'm gonna be coming close to my, let's say, edge of mental abilities, let's say. And there are a lot of people out there who, we're going into basically people who are bond traders or who are bond special, will be more able to explain that better. However, the point being that oil is not really a killer. It just ends up being a really bad news, because we're going in the middle of a bigger bad news. Now you have that. You have international news with the whole Turkey being a a bitch and trying to basically, fuck things over in Europe. We have things in North Korea. They're like fucking, shooting up unidentified things in the sky, which that's the U.S. Navy said. But really, it's just shooting up like missiles because they want to do that, for no, for whatever. You have international markets that are down. Everything is down. The one thing is everything's up is freaking like I was showing before in my previous streams last week on Sunday, Monday, Thursday that treasuries, all treasuries were up, all yields were down. Yeah, yesterday when I was looking at the market in the futures, the treasuries were like all below 1% yield. That has never happened in history. Not only that, if you think about it, you have the Fed fund rate, let's say that's at 1%. Just assuming 1%. Generally speaking, most times, even the shorter term rates would be like at, I don't know, 105, like 1 and 5 basis points, like 1 10 basis points, something like that. I'm just just pulling out of a hat. And the further out you go, it steepens, right? That curve steepens. So let's say 30 years would be, I don't know, 2-3%. What happened though is that, and I mean I've been following the market for, I don't know, like 16 years. I'm 36, so 16 years. There's a lot of other people who are in the market. I'm sure they've seen a bunch of shit, really amazing shit. But this is amazing to them. Like, I was part of a chat group before, a trading chat group. I jumped into them. Like, I haven't talked to them in like years. I'm like, holy shit, let me go see what they think. Basically, I mean, people haven't seen these things. What's happening now? So, what I was saying is that you're seeing yesterday 10-year yield was at like 40 basis points. I mean, they're yielding less than the Fed fund rate, which is at like one something, like 111 1 and 11 basis points. In other words, the Fed's ability to influence, at least now, looks to be like shot. Right? At some point, they might be able to get it back, but right now, it's like they have lost, at least momentarily, the ability to affect the market or ability to influence the market. And so you're seeing massive fear going into it, right? And it's kind of funny because now you might see, because I was looking at the dollar and you might see actually people going to dollar because what's the point of going into treasury when they're giving you, 40 basis points, 50 basis points, 70 basis points. I mean, you might as well just be in cash because if let's say you get more of a basis points down the line, right? Because why are you there? Like the whole reason people are there is because they don't want to lose money. It's not that they want to make money. They don't want to lose money. But let's say yields get better. Let's say yields then turn up and goes above like 1, right? Let's say 1% now on the 2-year or 10 years, whatever. Well, then they're gonna take a hit on the treasury itself. So, and this is something might happen is now the fear money might just go into dollar. So this is something that we're seeing events that are basically that's basically like black swan type shit, right? This is basically unusual, unforeseen things that are compounding everything. All this time we were just going in the market because things were stable. It was the future was, we can expect a future. Now things have happened because it's systemic. It is not financial in nature or even fiscal in nature. What has happened is a systemic event that has this cascading effect everywhere. Things are falling off the chart. And so the funny thing is everything's falling. Copper futures. Copper has been falling for so long. And like I showed on one of my previous streams where, if you look at copper, it was falling like a monkey before the market moved down in the States. It was falling even before the Chinese market started to fall, which goes to show that essentially there was less demand looking forward. or at least the market was precipitating a less, outlook of less demand in the future. So what we have now is that the next ball, the next yeah, well, whatever, the next thing to fall would be if it looks, next things that might happen is this: if you start seeing unemployment numbers being lower, if you start seeing like PMI numbers getting lower in the state side, that means not only do we have, like I said at first, we definitely have a correction. We really have a bear market. Even though technically you're supposed to kind of wait a little bit longer for a bear market, but I'm just gonna say we do, because of the severity of these moves. And on top of that, if you now start seeing because based off of the way that these retards are dealing with, Corona Chan, the Wu flu, you might see that those numbers getting bad. So as we start to see the numbers, then all of a sudden people are going to be getting out of their positions, and you actually might see even a recession. Now, we don't know the future. This is not just a regular correction. We don't have in a correction, you would see that markets down, but the correlation with other markets would not be there. Like, in other words, that the inverse and the relationship that you have with other markets, for example, if the market went down, right, and it just corrected 10%, but let's say all the other markets, the markets that generally would be going inverse, did not go up. Let's say the market went down and the treasury stayed the same. What that means is that basically people are just going out of stocks. That's all. It's overvalued. Well, usually that's what it means. Not that's all. I guess I should be natural and just talk like the way I do and not go back all the time. So basically, usually that would mean that the market's down, it's a correction because money flow, assets are not flowing into other assets. Therefore, they're really not looking to go into other assets and make a big or long-term investment. What's happening is market got overvalued, people are taking the profits, so on and so on. This is not that. This is totally different. And like I've been saying from my previous streams that, I don't want to brag too much, but I've been pretty much right on a daily basis now. The thing is, I shouldn't say that going forward, I shouldn't say this is obviously bad for me, right? I mean, it's as a trader, you shouldn't say that. But it's internet. I should be I don't know, take credit for that. But going forward now, we have essentially what might happen, right? Markets simply does not just keep on going low forever. They turn back. They turn back some. In other words, that they just don't like. I don't say they turn back. I mean, like they just keep on going in a straight line. Even if you look at 2008 and 2000s, which by the way, people are saying this is the same thing as 2008. That's completely stupid. In 2008, it was more of, let's say, a financial traffic jam, let's say, right? Where banks and institutions were not able to lend to each other, and capital dried up, basically. Liquidity dried up, and so that's basically based on the fact that they're off the books mostly, and also sometimes on the books. Assets that they have, the valuation that they had is not the amount of they're not the right valuation, and so nobody knew what the value was, right? And so essentially you had a gridlock in a sense, and the Fed was able to come in and basically pump quantitative easing, made it easy to capitalize the system, made it lowered the cost of borrowing and all that kind of stuff, right? So lowered the interest rates and all that. This is nothing like that. This is totally like external to the finance field, and the remedy to this is really, I mean, it will help somewhat, right? Financial measures, but what will help is basically getting doctors or some, like stuff like that, right? And international events not getting worse to where it compounds the problem. But now let's look in the future what might happen. Like I was saying, the market doesn't necessarily just keep on going down. If that happened, then it will just go to the moon and come back down all the time, right? The market has been oversold really bad. And the thing is, if you look at other situations like 2008, 2007, 2000, if it goes down this bad, generally at some point you're gonna have people coming in who trying to get the bottom feeders. Let's say they want to catch the bottom. I don't think this is something you should catch the bottom for. But if you have positions, tired of the gay bears. Bruh, you call me gay? I'm happy. Is that why? But what's up, Trevor? So what happens is that everything is so much oversold, and I'm gonna switch to my screen here. I'm gonna show you guys something. All right. Okay. I'm not gonna make myself that. You know what? Let's make me a little opaque here. Okay. Chroma and excellent. Okay. Cool. So as you can see, my beautiful face, I'm still there inside the picture. So, so if you look at this thing right now, right? So we're looking at dollar. It's slightly up today. That's because the all the treasuries were so overbought that now, like I was saying, that what's the point of getting 50 basis points on a treasury, right? On like the 2 years or 10 years, and then stuck with it, and then having to get out if unwind it. You're going to be basically probably not going to be at the same price, right? So obviously, yield's going to go up, and your yield is going to go up at the same time. I'm not going to get banned, sorry. So yield's going to go up, and you're going to be unwinding your position and take a loss. Now, why is people going to Treasury? Because it's safety. That's all. So people are not going to go dollars, but what happens is usually when in a massive like downshifting market like this, what happens is things just doesn't go down like what happened, like keep on doing this every day, right? Now what might happen is that there'll be slight retracement. We saw this retracement before last week, right? But I was saying on Thursday, market will be down on Friday because we are in a downtrend. Friday is people are unwinding their position. That's it. If you look at Friday, there wasn't a lot of, to be honest with you, look at the amount of people who are buying. They were just pushing up at the end, right? You also know that the Fed is there with, they're basically, they're like trying to put this market up. They're trying to keep this market up. Yet the market, even though it ended up higher, it was really lower than Thursday's close. So again, pressures to the downside. Today, the volume went up. Market just cratered. Everything went down, right? Everyone's afraid right now. So what's gonna happen? Again, things just doesn't just go down like in a like a freaking line. Market is likely to come back up again in the next few days because it's oversold. Like we were for example. Like we were saying before, that VIX early in the week, like last week when I made the stream on Tuesday, like the VIX was like, I think this was on the 3rd, yeah, something like that. So, not on Tuesday, on Thursday. Like I was showing that the VIX is not as, people were complacent. Market went down on here, let me go back. What was Monday? Yeah, so the market went down on Tuesday, right? And people weren't that complacent at all. Like, the people were too complacent. The people were not, fearful. But now you're seeing the fear come in, right? The amount that the market went down did not match up with the VIX numbers and the spike, basically. But now you're seeing that fear come in. So now in the intermediate term, we might be seeing a little bit of a base for a moment, and but still it's not a buying market in my opinion. You know this is going to be something of like, if you had a position you're going to unwind, you're going to unwind. Also, one last part is you have to think of like institutionals, people who have big positions. They're looking at these numbers, and they're not going to hold. They have their freaking stops on place. If the market keeps on breaking down, which is likely, we are in a downward market. You're gonna see a lot of mass sellouts, a lot of like closeouts, a lot of margin calls. Guess what? They're gonna be unwinding the position. You might even see a lot of flash crashes. But the whole point being that it will make things worse on the downslide. Right now, it's oversold. Look at the gaps. These are huge gaps. This is just oversold. We are facing down like long-term levels here. There's a lot of congestion at this level, so prices are probably going to be kind of bouncing around, like let's say 27. Like we said, we were looking at 28.40. It definitely crashed right through. That was like so 2057 or so. In fact, it started at 2857 or so in the morning. I had it at 28 50 or so, and not exactly 2057, but here. So that was the line I had starting in the day off of like last week. So let's see. And yep, and it was like basically it's all the levels are being hit, and you see there's a lot of congestion. There's a gap in between 29 and 2850 or so, let's say, and the market moved down real quick. So you might see a rebound in the next few days. Obviously, it's not a market to buy in. That's my thesis, and that is because down market is correlating with market internals. It's been confirmed by market internals. It's been confirmed by its other moves. In the ratio moves with other markets, and in the relationship it has with other markets. Capital is just flowing into treasuries. People are fearful, and the fear is not because of, hey, that there's some financial thingamajig that went wrong. It's more so because people are dying, and people are not going to work. Things like that. And then on top of that, you have other events that are coming in making it worse. The whole Russia, the whole oil price war thing will be a thing in of itself, but market is probably markets. This is not the same situation. This is in context of a much worse overall move. Now, what you might see in the next few days, market may be going up. The different levels that I am looking at is going to be there, like basic about the 2950 or so. And again, these you don't have to be perfect with all these different levels. This is just on the main long-term charts. If you look at if you go to daily, internal market intraday, those levels will change. It just depends, right? So I'm looking 1 hour. When I'm looking 1 hour, that might change. However, when I'm looking at 1 day daily, this is approximate. This is like general zones. If it goes up to, let's say, 29, 30, or still 29, 49, 47. I thought I had 47. Yeah, 47 is gonna be kind of like a master level. If it hits 28, what was that? The low on the 28th was 28.55. So if it hits 28.55, it's able to break through. Then you're looking at 29.57 on the upward level to the upside. But it's something of, let's say, counter trend. I personally am not necessarily a counter trend trader. But you might see that if it doesn't to the downside, if the market's not able to hold, right, and not able to go up, which if you look at the futures, it's kind of moving up a little bit, which is basically telling you that it's oversold right now. But if it doesn't move up, then if it goes down, then you're looking at a few levels to the downside. But this is area that's going to be congested from this point on forward, about 2,800 or so, up to 3,028, 2004. 35, that was my level, 35. So that was my previous level, and it went through it. So because if you go back, here, let's go back. Okay. This is basically kind of like the levels that we're looking at long term. But in the intermediate, if you go back a year out, you're looking at basically this 27, 30 or so, up to 3,000, right? So this is like the big level. And that's gonna be like intermediate. Then this is a strong level at 29. Well, I had it like 29.47 or so. 21, 28. Yeah, let's just say 28.47. I'm just getting confused with all the pricing, but in that zone, and then the next leg down, you're looking at 26.99. Okay, that was the okay. So that was basically the support point back in 2018, middle of the year, and then was a lot of congestion in 2018 late. So 2,700, and then 2622. So that's to the downside. But I don't, at this point, it's so oversold. There's so much fear that it's probably like to kind of bounce up a little bit, retrace up a little bit. Like I said, maybe go right now. It's at 27.46. That's where it ended up being. It's, I can see it easily going, well, not easily, but I can see it definitely kind of going up to 28.50. And given that there's a lot of congestion here, there's holders there. And if it breaks up, it just fell through so fast. It's probably, there's not a whole lot of congestion here. So there's not a strong zone of resistance or there's not a strong zone here in the immediate, like trading time frame. So it's likely to even go up to be honest with you, about 3,000 if it moves up or so. And I don't see the market necessarily moving up higher than that. And this is going to be time when a lot of people who bottom feeders are trying to come in and kind of like say, getting a good price. It's just, based off of what's happening all across the board. It's probably, my bias is it's not intermediate. It might go up, but long term, by intermediate, I mean in the next week or so, it might retrace. It's oversold. It might go back to the upper area congestion, about 29.50 to 3,000 or so. But I don't see it going much farther. And in the long term, I mean in the next quarters or so, it's probably gonna keep on going down because the full effects of coronavirus, the oil wars, now things are just getting compounded with so many different things. It's probably not gonna be good for the market. By probably, I mean 90%. That's my, I'm like 2 standard deviation that this is not gonna be good. Market's gonna be going down after retracing. So that's basically my story. I'm sticking to it. And I'm gonna go a lot bigger, because I can just keep on talking and I'm gonna make another video about kind of like going a little bit more in depth, and that's not gonna be stream. I thought I was gonna make a quick stream, and it's already freaking, I don't know, I've been on this film for 45 minutes. So that's really it. So basically, looking forward, maybe it's oversold this week. It might kind of come back up again. As you can see from this point down forward, about 29.50 on Friday, the close of today, 27.46. Huge gap, not a lot of congestion, not a lot of people, trading there. So that's a good spot to look at, maybe for the price to come back and prove itself there. So that, if there's a counter trend, because it's just really oversold. On the other hand, my bias still to long term is going to be that look at everything else. This is merely the start of something. I think this is literally the start of like the, we're gonna be dealing with this for some time. And like I said, once people start seeing the unemployment numbers and and PMI numbers, then people will really basically at that point we will start having people just like give up and just say we're in a recession or something like that, because at that point you're gonna see numbers affecting GDP already. Look at all what's happening in other nations, other places, right? So, and look at the way that these retards are dealing with coronavirus, right? The Wu flu, nobody wants to say or do the right thing because it make them look like they're being hard asses, right? So why care? Everyone wants to do it easy, make it look good. The media doesn't want people to panic, right? So nobody's gonna say, hey, they could have stopped this like 2 months ago and just say, hey, nobody's coming in through our airports or some shit like that. Well, no, market will be down for like a week. Who wants? You don't want to be responsible for that, but you're responsible. The people will come in, do what the fuck they want. They go in self-isolation, whatever, and this is what you end up with. This effect again, the Fed, TLDR, Fed in some ways have lost control of the immediate market action. Treasuries yield is on its off the charts, historic lows. All of them yesterday was below 1%. All the whole term, the term structure from like freaking T-bills all the way to T-bonds, never has happened. That goes to show the amount of fear in the immediate sense. The fear might kind of come off. There might be some good news coming out of other places, but that goes to show the market going down is correlated with assets moving into other areas, primarily into treasuries. Treasury might not be a good trade now, also because, again, why am I gonna buy a treasury and get paid like 40 basis points, yielding 40 basis points or 50 or 70? It makes no sense. So people might just go into cash for the time being. So oil is oversold, but oil might be protracted. That's something to think about, is because it still needs to be seen, but given the fact that we have seen prices that below 30 before, and in the immediate sense, and how far it gone down, unlike other times, demand is it's low. Demand is low not because of financial slowdown. It's literally because people again are quarantined. Half the nation is quarantined in China, and all of Italy is not quarantined. Well, not half the nation, almost all the nation in China, right? So to get them back up line, it's going to take a long time. In the meantime, if there's overstocks of oil, basically it's going to crash the oil market. So prices are probably going to be headed lower, and probably be under 30 pretty soon, and consistently be under 30. And I don't know, I'll probably start trading oil. I'm just trading piddly little amounts. I gotta jack it up and put some more money in. But yeah, and oil probably is going to be a big. It's probably still going to be heading down lower 30. But yeah, that's really it. Market's fucked. It's still in the long term downtrending. The levels we're seeing right now, we're going through the congestion period. If you go back, I guess I'll leave with saying this. If you go back 1 or 2 years, there was a lot of congestion. The areas that we're seeing is going back all the way to 2018, right? 2586 up to 3000. So that's basically in the big picture. That's the congestion areas we were looking at, technically speaking. And in the last 1 year or so, the market moved up pretty swiftly. Not a whole lot of congestion, but that's going to be basically where you're at right now, which is 2746, 2813, 2850. So those are the levels that kind of interesting. Those are the levels to look at. If it goes to the upside again, we probably, I don't know, I'm looking at like at the max like 2950 to 3000 or so, that area. If it does go up there, but based on what's happening, it probably countertrend retracement a little bit, and given how weak the amount of gap there is between 2950 and 2750 or so, I probably think it's going to be filled, and it'll probably go up to that level, but I think it'll sputter out. I mean, I'll take that. To an extent, I think that even that will happen or not is questionable, but it will probably retrace in the short term and kind of take back some of the losses. But it's still a quarter out. It's a bad market. So anyway, guys, any questions, whatever, let me know. I'm gonna be making a big giant video about how we came here, what's happening, what to do, some of the market sectors. Gold is doing great. We might go over that. Gold junior miners. This was my favorite back in like 2000s to trade. Gold is like doing great, obviously, because fear is in the market. The dollar is going down. Other currencies are taking a hit. So basically, this is both acting as a fear indicator now, and somewhat of a inflation indicator. But right now it's really fear is driving into it. You look at GDXJ, which is like the junior miners gold index. It's crashing. That by default, because it's like think of it like junior miners is kind of like a leverage ETF in a sense. So GDX is basically miners, and GDXJ is junior miners. So they went down. Generally speaking, there's a lag between when gold goes down and the gold miners go down, especially the juniors, because essentially they're really dependent on funding, and in bad credit times, credit's still kind of good, but it might go bad. But still, for them to get funding and get their get basic cracking and mining and all that kind of shit, it gets to be it takes some time for all those things to line up. But back in 2013 or 14, I believe gold was about like $1,100 or $1,200. $1,100, I believe, was the cost to get it out of the ground. And it changes. I haven't checked lately what that is, but it's definitely not 1,700. So as gold gets more expensive, the cost, they become more viable, right? So the junior miners will be more active, and basically you'll see them being one of the things that I might be looking in the future, because as gold goes up in prices, in terms of for every $1, right, the junior miners will outperform. It means more to them that $1 compared to like Ashanti Gold or Yamana Gold, the top tier guys. Few other things. We'll talk about, like, I'll look over some other trades too. MRO oils. I mean, people are not run out of oil. I mean, they're so fucking low. I can't think of. I mean, yeah, look, Occidental Petroleum, right? These things are so damn low. I mean, long term, maybe like buy some really like long term puts. Sell some puts or something like that. So essentially, we need oil. I mean, oil might be low now. That's the thing. There's a dislocation, but we will need oil, and what that would mean that is it's not going to be at 360 for the next. This is a longer term play, right? In the short term, it's so low that it might jack up real quick. But given what the price wars, it's not. They're going to be hit, right? All the shales are out. These shale guys. Like a lot of people have been pumping them up, and and people who I've talked to, I've been like, they probably know that I don't believe in shale. I don't believe in shale. I mean, by that I mean I don't believe in their quote unquote story, right? They're just simply, there's more hurdles to them to be commercially viable than, say, out of the ground and cost like 20 bucks per barrel to get it out of the ground in Saudi Arabia or something like that, right? So you're gonna see more breakdown in the oil market. It might go even cheaper, but for what it's worth, that might be really really nice really nice valuation you might be able to pick up. Man, look at that, 493 implied volatility on that 13th of March. Let's see. Sweet holy Moses. So, you know, let's see. I'm tempted. I'm tempted. But anyway, guys, that's really it. That's not bad. I mean, let's say you're taking a you're buying a 4.5. Not that's not bad. That's not bad. So, yeah, I mean, short term you may be able to sell some puts and maybe buy some long term calls a little bit. Keep on rolling it week to week. But yeah, that's oversold. But anyway, guys, the Ayatollah, man, that's all they got. Jesus, man, my uncle. Shit, listen, if they don't have oil, things are falling apart there. I mean, well, they have other industry. I mean, it's an oversimplification. People say Iran got nothing. Man, Iran, they make like fucking cars, missiles, trains, ships. I know, Tom, you're joking. I know that, but they're also breaking down. I mean, look at people didn't take the Corona thing too seriously, right? But they should have just looked at, why would China fucking like put a whole huge province in jail? And think of how what it entails. What does it say about how much what the estimation of the situation is, right? And looking at that, they had these people and other politicians in other nations, especially Americans, even worse because they had the Ascension Island and had such head start on this thing to deal with it, but they didn't. But anyway, no, they did not. Seriously, come on. You don't look anything like a friggin' Persian. Anyway, it was an amazing time. I'm gonna make some more videos tomorrow. I'm gonna do an end stream tomorrow. I'm gonna make this a permanent thing, the streams. But I'm gonna make some big videos about maybe how to deal with this, from an investment perspective and all that kind of stuff, and how we got here, what might get out of, what might lead to something like that, getting out of this situation. So anyway, so this is a protracted market situation, not a one-day thing. So, and we are facing a maybe bear market. This might be definitely correction. My estimation, a lot of people might not say bear market because it's just only a month. I think it's a bear market, and numbers depending. My estimation is it will go into recession, in which case, shorting the market is the way to go as the market's going up and it starts to sputter out on any kind of retracement or counter trend, uptrend. It's always a good time to keep on selling the market. What was that? Rinse, lather, repeat. So that's all. But anyway, I'll look up some other trades I was thinking of. Like I said, like oil's too cheap. It was such a, massive disaster with oil that it was too cheap. So, long term, you might be able to build up a position, like basic cost average in. And gold is the other thing I was looking at. But yeah, I'll hopefully I got talk to you guys. I'll keep this thing open for 1 or 2 more minutes if anyone has any question. But I think I'm done. I can keep on talking, and as long as I have the chart in front of me, I can just keep on doing so many different things. But it's like 11:40, and you guys also have to go to work, and I can literally go for the next like 2-3 hours, no problem. And so I figured make a video and post a video, and the video will be on my channel. I figured because I'll just do streaming on the trading show. My channel is Trader Sid, my personal one. I'll put my video there, and those will be like freaking probably like 2, 3, 4, 5 hours. I don't know. To be honest with you, I might like break it up into like 15-minute parts. Hey, what? That's I mean, he's God Emperor, man. You compare me to God Emperor? Seriously. I mean, shit might be bad, but he's so confident he'll make it look good. You know what I mean? And so, see, that's not the problem. See, him giving like people like confidence because he's dealing with this in a confident manner. People are not really. I mean, it's like they'll get blindsided by how bad this thing is. And like things are popping up now. Like every state now has one guy who got this corona thing. Now we know like, oh yeah, that guy's in self isolation, and they were going fucking dancing with his daughter to this dad daughter dancing ball thing. So shit is happening all over the place, and it's like people don't really have the control. Fed doesn't have lost control basically, right? So things are coming unglued. So it's not gonna stay unglued forever, but things might. It's just the thing is that how do you deal with a market that's running away and kind of going at its own speed, and people don't necessarily have control of the market. You see, like on Friday, they were trying to put the market up. Like it was just a little bit higher, than where it opened up, right? And they have open market operations. That's why, the fucking Fed is behind. They're trying to keep things up, trying to basically not have things just fall off the bed, But to be honest, what else could they do? And the other thing is, and I'm gonna just go on tangent after tangent. I mean, like back in 2008, interest rates were at 5%. Now it's at 1.5%. That's where they're starting from, right? So even the starting point is not the same. So what they can do: quantitative easing, more open market operations. So, but there's not like what else what else what else could they do? It's like there's not a lot of good options. Or that's the other thing. I mean, when they move like cut the rates like 50 basis points within a day. I mean, what does it tell everyone? Like they're fucking scared as shit. If they had done this like on a more of a graduated way, then it probably would have been better. Now, to what extent? Like looking back, I'm just a guy saying what they should do, but. They overreacted, and everyone basically saw that. And I was on my when I made the stream on last Sunday and Monday, I was saying that like, that this is probably not going to end well because they're going to overreact, and people just saw into it what other people were seeing into themselves. Other people were afraid. They saw the Fed getting afraid, and then everyone just started to fucking sell everything. Again, the other thing, one other big thing is, the more we start to trend down, remember, all these institutions, they have the big positions. They have the stops, right? They have the long-term stops. They have long-term positions, right? Each level that you see going down, these levels are, you're going to see these pivot levels become important. And my levels are just approximate level. You don't have to be a scientist about it. Technical analysts, I'm a price action trader. Technical analysts will look into it. They wouldn't be perfect, and they have this perfect channels, perfect line drawings. You don't have to be doing that. All it is just general zones and areas. If they get hit and they're going down and these zones are taken out, you might see just like a lot of flash crashes type of really hard moves, because again, the institutions, they're selling out. They're getting out of the position. Also, you're going to see that in big markets, big names. Who's been like on all these different accounts, like all these different 401ks, are they gonna have Apple or like Frontier Communications? Apple. So guess what's gonna happen? A lot of those big names will be taken out. A lot of those big names will see a lot of big moves. And there's those selling out of Apple with high valuation, they're not gonna be able to put them in small valuation stocks, right? It's simply not possible. If I'm selling one share of Apple, it's $1,000. Or let's say Frontier is $1, right? So I'm not gonna go sell Apple and buy 1,000 share of Frontier. So simply, in other words, what I'm saying is that valuation then will basically, the market will take a bigger hit as it's moving down. because more of the big valuation will be coming off the books. So that's just what happens when market goes on a cascading effect, like if on the downside, which I've seen in 2008. But like I said, I've talked before, this is not like 2008, like all these other retards are saying. This is completely different. The effect in chart and pricing on stock market is the same, which is going down. But the reason why it's going down is not necessarily the same, and so therefore the remedy to it might not necessarily be the same, you know. I don't know. See, I said I was gonna shut down like 10 minutes ago, and I kept on rolling 10 minutes. So, Tom, everyone, Trevor, you know, everyone, you know, thank you for being here. Bacon, I think Bacon's here. I got 5 people here. I don't know like how to look up like everyone is over here. Let's take a look. Cause I use a different. Let's see. Yeah. Oh, you know what? I'm also gonna open up my Discord channel, so that way, like, you know, you guys can come by anytime, and that way, like, you know, we can kind of hang out. And also, you know, these days I might just start streaming like 24/7 or like in the morning when the market's open. That'll be fucking amazing. You guys keep me in the background. Man, yeah, I gotta find a way to see like how, you know, all the people that are on my channel. I just see people who are like commenting. But yep, that is really it. I hope everyone got something out of my video. You know, hopefully informational, educational, at the minimum, you know, entertainment. And by the way, I'm not responsible for everything I said is informational, educational. None of this is advice. None of this is recommendation. At the worst, you know, I'm just a retard. This is all entertainment, pure entertainment. This is all bullshit. All right? This is all ironic. All right, so adios with that. I hope to see you guys again tomorrow. I'll let you guys know beforehand, and I haven't set up my Twitter. Tomorrow I'll go open up Twitter, and I'll let everyone know beforehand, like, you know, when I'm gonna stream. And I'm not gonna stream this late tomorrow. I'll pick a bit, you know, like maybe 7 o'clock as the regular time to open up a stream at on an everyday basis. And yeah. Also, you know, please subscribe and like and share on all that kind of stuff. But yeah, I hope to see you guys and talk to you guys tomorrow. Watch out for my stream and more of my videos. Twitter, I'll plug all this kind of stuff in onto my channel, and that way you can, like, you know, I'll basically, you know, I don't have a job, I can tweet all fucking day. So yeah, that is it. Tom and everyone, yeah, you know, Bacon, Trevor, everyone else that are over here, have an awesome day. I wish I was at, you know, back in my old job. You know, I was telling Jonas, like, I wish, like, I you know, so bad that I could be back on the trade desk for like this month, you know, or however long this thing lasts. Just amazing, just action, just the amount of action. Jesus, man, that would have been awesome. That would be fucking awesome. I quit at the wrong time. So anyway, adios. Check you guys later. It was small, man. What the fuck? I thought I like, yeah, I thought you know, enlarge my screen there, but I was the little freaking midget at the corner. Alright guys, bye.